In recent developments, brokers are uniting with Wall Street to oppose SEC citizens' proposals. The situation is escalating, and tensions are rising, evident from reports on Bloomberg. Retail brokers are actively challenging the SEC proposals, raising concerns over their potential impact. Given that they represent over 100 million individual investors, their insights and warnings deserve attention from the Commission.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert: this is not a financial advice video. Examining the perspective of retail brokers, it becomes apparent that 98% of them find the economic analysis associated with the SEC proposals to be flawed and incomplete. Gary Gensler, in his statements, emphasized the positive outcomes expected from these proposals, focusing on incremental changes, transparency, and altering the preferred methods of institutional investors. However, retail brokers are skeptical about these claims, asserting that certain institutional investors have been favoring specific clients while leaving others with disparate asset prices. Retail brokers argue that while there is majority support for market infrastructure changes that may reduce sizes or increase transparency, there is a concern that this could lead to a reduction in market liquidity. They stress the need for a thorough reevaluation of the market after implementing these changes, cautioning against rushing into new rules one at a time. The strategy of presenting multiple proposals simultaneously is seen as a tactic to increase the likelihood of some proposals passing through the voting process. Recognizing the difficulty of getting a single proposal voted for, let alone enforced, brokers believe that flooding the system with multiple proposals reduces Wall Street capacity to effectively oppose each one. They anticipate that this approach might shift the game in favor of the individual investor, marking a potential change in the dynamics of the market. The retail brokers express reservations about the SEC best execution standard, with 94% believing it to be overly prescriptive and likely to interfere with their efforts. They anticipate unintended consequences that could outweigh any benefits, citing the efficient functioning of the market for institutional investors over the years. Brokers argue that a significant shift is imminent, with the balance of power potentially moving away from larger entities to benefit the individual investor. While it remains uncertain if the little guy will indeed gain more, it is expected that such changes could level the playing field in the stock market. The proposed audits, focusing on hedge funds and their associated risks and valuations, add another layer of complexity. Brokers highlight the challenge of accurately assessing the true value of assets under management, especially considering market volatility and changing interest rates. They hint at the possibility of institutional investors losing some benefits due to alterations in preferred borrowing terms. The overall sentiment on Wall Street appears to be resistant to the proposed changes, with many in the financial industry expressing discontent. The argument against enforcing these proposals revolves around the belief that they could disrupt a system that has been profitable for institutional investors for many years. In conclusion, the battle between brokers and the SEC continues, with retail brokers leading the charge against proposed changes. The complex interplay of economic analyses, market infrastructure alterations, and potential shifts in power dynamics make this a critical moment for the financial industry. As the SEC navigates through these challenges, the outcome will shape the future of the market, determining whether the proposed changes will be enforced or if Wall Street resistance will prevail. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.